Hi, listeners. It's Stephanie Ricca here with a quick note before we get started. Hotel News Now is changing its name to CoStar News, so our podcast name will change too in the coming weeks. Same smart reporting, same hosts, the great guests you've come to expect from us, just a new name that reflects our overall branding change from Hotel News Now to CoStar News. You don't have to do a thing. Just keep listening and we'll take care of the rest. Thanks for sticking with us. Now let's get into today's episode.
Hi, everybody. Welcome to the CoStar News Hotels podcast here with STR's Jesper Palmqvist. Jesper, it's been a few months since we got together to do this. How's life?
Oh, life is good, and it's funny. You should know, life doesn't stop just because you step away. Isn't that funny how that works?
Neither does the podcast.
It is. That's right. We had some good chats there, but it's really good to see you back, and happy to catch up with you again.
I trust that Trevor took care of you in my absence.
Absolutely. I mean, it was nice to talk to a North Melbourne fan for a little bit.
Oh, and he's so diehard,
right? For sure.
So with the idea in mind that I was gone for a couple of months, let's start with what's been happening across Asia Pacific. What do I need to know?
Yeah, what do you need to know? Well, the good thing on the timing tonight, which you wouldn't know, is that I just pretty much landed, and a rough landing. How many years ago was that you had that landing when your wheels almost touched the tarmac, and then the pilot says, "No, we're running out of tarmac," and then go straight back up at a steep angle?
Oh gosh!
Yeah, that was here tonight. Singapore has.
Oh my gosh!
Yeah, I had that, and we took circling overland and then coming back, and a steep. Changi Airport in Singapore actually has, percentage-wise, the most lightning in a year, because of where we are. Anyway, so I came back just a couple of hours ago from Bangkok, where SEHIS, like the Southeast Asia Hotel Investment Summit from Hoftel. It's a great couple of days. It's owner-focused and related, so that's always nice. We do that, and from a CoStar perspective, we have a number of people there. Matthew, our friend, was there, and Karen and Alice from Singapore office. Matthew did a great panel on AI, on how that's affecting the sales, revenue, marketing. But so I have you have a good update there, and a couple of things that stand out, bro, from a little bit on investment and performance. But where I started that, and what we talked about, is just that the openness that I keep coming back to in this quarter, right? So the numbers that I shouted out was 43 and 50. 43 countries today can get an ESTA, right? So a visa waiver to go to the US. It's still a little bit of work, but it's a lot of countries. China has 50 countries, no visa. So how that completely changed, and US and UK kind of making it harder, and most countries here are making more open. If it's PR related only or long term, I mean, you could debate, but it's an interesting shift, especially when more and more governments, like I said to Trevor last month, like government spending less, not just in the US, but in many countries here as well. So if you're dependent on government business, that's a bit of a challenge in some places. I think that a lot of the people in this region are disappointed in 25, yeah. 5.5 months in. And a lot of that comes from, so I was doing a piece yesterday about, listen, year over year is one thing, actual numbers is one, because we've reached really strong levels in many places. But if you don't grow, right, the expectation is growth. But yeah, 25 was never going to grow to the same thing, and we're in such a different reality now. So since it was an owner event, they have infinity of brands to choose from, right? Franchise is growing a bit more here now, right? So in Southeast Asia, and you have the family offices, and the owner is everything, right? It's not about the management company like in your neck of the woods. Yeah. The power they have. So, and it was a great conversation of the value of white label, where to find some best returns, etc. As I think that's true, and I don't know if you're seeing that in the US. Just as how we still obviously have the same issue with office assets having high vacancy rates. All right, so it's mostly about value add here. Yeah, high construction cost and land costs. I suppose you're seeing the same thing there.
Yeah, I mean, obviously things have moderated somewhat from where they were not that long ago, but I mean, it's a lot of the similar trends for sure.
But the other things, of course, that the owners have realized is this enforced productivity increase. When you look at the P&L that we have and the data, productivity is high. Right, people running on lower staff and still producing some pretty good results as revenue growth is declining. And I tried to make the analogy on stage. I don't think it really worked, but I thought of it in the moment. Right, how much fat do you want to cut off a steak before it loses all the flavor? Because chefs would say that's kind of like when productivity, you can only slim it down so much. Right, and eventually you need to deliver a product unless you are a pod hotel where it's like no turnover at all. So I think it tells us realizing that, and when we look towards 25, rest of the year, and 26, the upside is that there's still a lot of capital ready. There's you here, of course, you have the family offices, right? They have less debt, and then there's some that are definitely ready to go, PEs and REITs, and people are ready to deploy. And one panel talked about investment into China, which isn't really brought up too often. Before it turns around, you start to see some assets kind of loosen in value, etc. The challenge there is, of course, funding. Where do you find the funding for that in China and enabling that? Mm-hmm. And I should say, since I'm talking about China, because Trevor and I talked about last month, there are now many places where rates are not dropping anymore. So kind of, we talk about stop loss, when is it turning around? So there are more markets that's following the trend. Demand is not exactly screaming confidence. The issue is business travel, weekday, right? So it's not just the leisure, it's the engines themselves that it takes a bit longer. Right now, the challenge is midweek and mid-scale, to summarize it. Midweek and mid-scale. And my team, sorry, go ahead.
It feels like with China, and I am still catching up, but it feels like with China getting to a point where it's even plateauing is a bit of a win, right? Because there was some concern, like the worst case scenario there was, the bottom falls out. And if we can get past that, then the confidence.
Yeah, no, absolutely. Plateau is good. And the thing is, I had a graph up as well. Like it's 17 months of negative growth. And from a national level, that's a long time. So we're waiting, and so now if that stops, and I think second half gently turning that around, and that's why we're forecasting some uplift there. At the same time, it's deflation, right? So we're 0.1% in CPI. So there's pressure overall, but I think it's starting to turn around. Year to date, 80% of submarkets are behind 24. That's a scary number. So that prevents. That presents an investment opportunity, I say. And people talk about Korea, of course. That's hot. People want to invest more in Korea. That's changing. A lot of new assets and interest in it. There is, of course, the for everyone who has assets in New York. I mean, Korea unions is the thing there. If you're not familiar with Korea, I mean, that can create severe challenge. And taken, as it was said on stage, like some of them can take up to 40% of your revenue, right? So unions it can be a challenge, but it's definitely a hot destination. And then India, Australia, Japan, etc., Singapore, and Vietnam, and maybe some distressed assets coming up there. So investment-wise, there's still, a lot of people looking and ready to deploy capital in the regions. That's a good story.
I will point out, Jesper, maybe this is your disconnect with the U.S. I don't feel like New York is viewed as like kind of the marquee union market anymore, or like the market where people think of like, oh, union troubles equals New York. It's L.A. now. For sure.
That's a really good point. It's become, and I suppose it's like when I give Matthew a hard time saying, "Oh, Adelaide, the city of churches," right? It's taking the Mickey there, but that's a very good point. I don't know. Maybe we should keep saying it's New York just to take the Mickey there. But yeah, LA, the new union market, huh?
It is the union standard bearer for at least the hospitality industry by such a wide margin these days.
That's interesting. Yeah, so then we went on and we talked about performance, right? So generally across the region, since you've been on, as we have slightly lower occupancy, like 5 points or so on an average, right? But you have higher ADR. So generally, you are generally slightly positive over last year, but it was always going to be a smaller market. So I compared it with peak years and last year and this year. but so much has changed. Like the markets are so much more diverse. We're seeing maturity into second tier markets happening for every year. Luxury is growing. We have more brands. So I spent some time looking at the rank just in pure RevPAR in USD. Maldives still at the top for the region, right? With its luxury components. But the big risers in that, Australia with its rate growth, Japan, of course, and Korea, and India and Indonesia. So Australia, Japan, Korea, India, Indonesia really moved up in the ladder, if to speak AFL. They've moved up and getting ready for the playoffs. So that's looking pretty good.
Which is not a feeling that we're feeling right now.
No, correct. But Maldives, I called that out because you think about it, we talked about this in the past. Like they've gone from like 120, 30 resorts now to close to 180. And that's a big transition. I did this graph when you put in like end of 2019, the cyclicality into 24, and it just slots in perfectly. Because it's a stretched out market. Low season right now, where the surf is amazing and it rains a few days, but low season is so low in occupancy, and all that is regained by even higher rates in peak season. So it becomes this drawn out. But on the books, it's got 4% higher than last year, so it's pretty good. The other thing I wanted to call out was the productivity, and that because we looked at ratio to sales in Southeast Asia. Normally, it's 65% rooms, 25% F&B. So we pulled a market like Phuket, transitioning, branded resi, etc. It's gone from, in 5 years, from 71 to 78% in rooms ratio to sell. Outsourcing of F&B and that kind of stuff, right? So it's people are moving, not in India, right? But in Thailand, people are moving away from that F&B because of the staff issue, because the F&B labor cost has the highest growth, which is happening in many places around the world.
Yeah, for sure.
People need to react,
But to your earlier point, there is like there's a breaking point on that, right? Like you do get to a point where you want to take all the costs out of the system, but some of those costs are delivering guest experiences, which is what you're literally selling.
And which is so funny. It's like you were there. What was one of the last panels that was it? The amazing Joe Peng Sam. So Peng Sam, the CEO of Pan Pacific, made exactly that point. As attractive as it looks, to remove that and take off the risk, part of your brand, part of your experience is that particular F&B experience. And if you take that away, so he's right as well. So it depends on who you are and what location, right?
Yeah. I mean, you could draw the analogy, like obviously hotels are not retail, but if you imagine the industry as a store, you can fire all your employees and take all the products off the shelf and you don't have any costs, but you're also not making any money.
Okay. I could come up with many interesting analogies from your country on that, but I'm not gonna. So let's not do that. Yeah, let's talk about another country where there is a little bit of crisis, and that's where I was, like Thailand. Voices. Yeah, but very quickly going like, hang on, this is not good, because you have a couple of months that were bad. What I liked about the conference and the conversation is talking about all the actual opportunities and challenges. About branded resi, super attractive with high yields and people getting into that more. Integrated resorts, if you follow that in the debate, plans are underway to pull in casinos in Thailand is the next country looking at that, right? Right now, if you read the news, there's some political challenges that we're not going to talk about. But like what happens is you have a couple of months of softer demand. It does make a difference. Mid-March to mid-May, it was like 5-10 percentage points in occupancy compared to last year, and rates not great either. My first question is it better than, is luxury holding up better? Because that's usually what happens, but not in Bangkok. Luxury and upper upscale actually dropped the most in the last few months. So Thailand has, I think it's two things. On one point, I was thinking now, is it reef surf or beach surf? And to explain this, like fundamentally, there's faith in Thailand as a market. People are investing, and people love it.
I was having a conversation in New York a few weeks ago about Thailand because I sat down with some folks from Outrigger who just bought a property there.
That's right. So people have faith in that, and people are driving it. And if you are heavily invested, like if it's mine or asset world or whatever it is, macroeconomically as well, like on GDP, on the automotive production and everything. But there's so much more that could be done and changed in terms of visa policies, investment regulation, transparency. Because the problem is then on my surf analogy, how long can you ride a successful wave? It's 4 or 5 decades of very strong and resilient tourism activity. People are looking at Malaysia now, looking at Vietnam, success and growth from a low base. But you have to, at some stage, I think people agree, start fundamental changes in infrastructure and grow with it, so it doesn't become negative experiences long term. Because right now, forward-looking data until the end of the year, not a good picture. Right? That looks pretty soft. And 26 is not going to be magical in Thailand. So people say like, oh, what happens next year? It's going to be, and then some called me up. So like, oh, you're saying 26 is going to be great. No, but after a pretty weak year, I don't see a second weak year to the same extent. So that makes it look like, oh, we're back again. The levels are pretty high where you are, but we've added a lot of new supply. So I think we're helped in Southeast Asia that new supply growth is slowing down in 26, right? So we get a breather, but I think there is something to say about the concern. If you are more exposed in Thailand now, you're not seeing the growth rates that you're seeing in other markets, that's for sure. Like you are maybe in parts of Europe now, London, etc., which is coming back, etc.
Yeah, I mean, it gets back to a lot of, and it's not just an Asia Pacific thing. You have this conversation in Latin America or any other, the Middle East, many other regions across the world. Eventually, these markets that have all this potential, they have to mature, right? Like it can't be the Wild West forever.
Yeah, no, absolutely. No, that's what's going to happen. I think the few markets, and I think that's an important, it's not a lesson, but it's an observation as we're approaching budgeting, like in the next couple of months. I think, we'll spend some more time talking about budgeting guidance and that, I think in this forum as well. People had an expectation of 25 that didn't realize, and Japan is a good example of that as well. We forecast Tokyo to go from this year, it will normalize over the course of the year and be 13% is kind of our forecast on RevPAR growth. Next year, 2.5%, right? So like, welcome back. And if anyone has expectations of really strong growth, now they're going to have value add, and it's not new supply, right? It's all about increasing the value of of the assets that they have, and it's across the entire country. And I think that's an important piece to remember about many of these markets. The next few years, if nothing weird happens, we're going to see lower growth of revenue, and you've got to manage that cost and have really good deals on the table and good returns.
I will say, here's my bit of editorializing during this podcast. If you are investing into Japan right now with the expectation of the current environment going forward being the same forever, you need to get a different job. Like, you're not good at this.
Hey, that's a fair point. But you would be surprised over the years. Like 100%. There's many of these owners that get that. Not owners and banks and everyone invested in it, but it might have one link in the chain that has a different agenda, but for sure. I mean, such extraordinary growth is, of course, only for a time period. But then you got to be ready to unleash all the performance increases and the efficiencies that you have created in Japan. And if you are good at that, you will steal share, right? Yeah. Owners are more mature here now than they've ever been in terms of using data and looking at it, and that's great. That's awesome. So if they can deploy all that skill set in 26, I think they will increase the flow through and the profit margins for next year. But it's definitely not easy. Competition is stronger than ever, right?
I mean, it's a sophisticated market where you need to understand it, right? Which, I mean, that's the fundamentals of the business, right?
So they say.
All right, so we'll get back to our first footy conversation of the year, and we'll make this brief. But I will note that, I was out for the first couple of months of the season. Did not go exactly the way we would have liked as Sydney Swans fans. But that's to be expected to a degree, right? Like, I know I'm
Yeah.
going to be the apologist here, but like, it was never going to be as good as last year. You got a coaching change. There's going to be a bit of transition, but it's not been that bad the past few weeks, at least. And maybe
No,
that's a
at least
symptom of me coming back.
they knew you were coming back and they started playing some football. Listen, there's the other factor as well, of course. You got Errol Golden back, so one of our best players back, and that's all fine.
I
So
will
when
share some credit with them.
yeah, and listen, when last weekend when you have 17 behinds and cannot kick for the life of you, that's always and still win.
Yeah.
It says more about the opposition, but like, is there now a chance for the finals? Like, no, because if you look at the remaining games, who's playing who, like, it's done. It's done because the good teams are playing less good. So,
I mean, it's the position you're in now where if you play above your weight class for the rest of the season, you sneak in at the bottom of the playoffs and then you get squashed. Like,
you will get squashed. You will get squashed. And I mean, Collingwood look great. Cats look great. And I mean, I still think maybe Crows have a playoff team this year. Matthew says no. He thinks it's either Lions or Cats, I think, or maybe Collingwood. So, yeah, interesting finale regardless. We will watch from the sideline, won't we?
I will let Brian Roten in the office next to me know that his Crows have no shot, according to Matthew. We'll see how he feels about that.
There you go. And he's based in the city, so you could argue he's got some insights, right?
Well, I'm sure he knows way more about this than we do, because we just parachute.
100%. I'm a fanboy. That's
yeah.
That's it. Please, everyone.
All right, Jesper. Well, it's been a pleasure to catch back up. Hopefully our listeners got a fraction of the enjoyment.
Something out of that. Thanks, Sean. I appreciate it. Have a good one.
Hi, I'm Davon Reed.
I'm Omari Head.
And I'm Chris Henry.
We're the hosts of the Next Gen and Lodging podcast. It's a monthly show in which we interview a new generation of hoteliers to get their insights into a variety of disciplines and topics, from finance to food and beverage and hotel operations. Listen to us on Spotify, Google, Apple Podcasts, or wherever you get your podcasts.
This episode was recorded on June 24th, 2025, and edited by me, Sean McCracken. Visit costar.com/hotel news for all the latest industry news every day.